every client that I work with, that our team works with, we introduce the concept of the trifecta, and it's going to blow your mind. You're going to love this, and it's going to help you better understand and how to use these LLCs. Now, the trifecta obviously is made up of 3 parts, and these 3 parts are the foundation of how the ultra wealthy build wealth and keep it. Now, the base of this is going to be a trust, a revocable living trust. It has nothing to do with an LLC. A trust is built for estate planning, and I've got other videos and articles and books on this, but the revocable living trust is that foundation of the trifecta, and is also kind of where your 1040 lies. This is where all the money comes down to, is your 1040 tax return that you're going to file every year. Every American has to file that. Now, on the left side, we're going to put operations. This is where you're making money to pay the bills and live life. These are my operational income and operational expenses. On the right side is where we're going to put our assets or our investments. On the right side here as well is where we create passive income. This is coming into play as we talk about these 5 LLCs. On the left side with operations, we're going to create ordinary income. Now, I can already ask you the question, which one do you think is taxed more? That's right, ordinary. So we want to do the best tax planning we can on the left side when we bring this all together. Now, the left side is going to be maybe a day job, a W-2. Maybe you're married, your partner has a W-2. Maybe you have a little side hustle over here. All right, that's cool. But ultimately, as you expand your side hustle, your side gig, or have a main operation, you're going to have an operational entity that's going to be owned by your trust. And all the profits of this business are going to come down to your 1040. And I'm going to talk to you about how you pay yourself. How does this work? We're going to get into it. On the right side, you might have an entity, very simply, that owns your investments or your assets. Think of this like a rental property. You might have a LLC, a little spoiler alert, over here owning a LLC, and you may have an operational online business. Maybe you do some freelancing or sell a product or service. Oh, that might be an LLC, but they're different. This is where you're going to create operational income. I'll put ops. And over here, we're creating this passive income. So this is the trifecta. We have an entity on the left, an entity meaning a business structure, and we have an entity on the right. Now, we might have multiple operational pieces of income, and we might have multiple rentals, but we still, at this structure level, have just 2 entities. And this builds our trifecta, 1, 2, 3. All of this wealth comes down and is potentially taxed at our 1040, and we want to build a structure to save taxes, create asset protection, and leave a legacy. This trifecta is magic, and it's going to help you better succeed. Now that we have the basic trifecta on the table, let's talk about these 5 different LLCs and who they're best for, and if it's a good idea for you. Sometimes I have clients that are using all 5. It just depends. Everybody's different. So let's get our trifecta back on the table. We have ops over here, we have assets over here, and we have our estate down here, or our 1040, right? So this is it. This is for everybody. Love it. So the number one reason for an LLC, or where they're used primarily the most, is a holding company. This is number one. You're going to have an LLC to hold a rental property, or maybe some investments, maybe some Bitcoin, maybe a note, some sort of passive investment where you've put money in and your money is doing the work, not you. That's the first place an LLC is going to be used. Now, why do we do this? It's to create protection. Either there could be a lawsuit that could arise with that rental property and we don't want them getting at us, or we can design the right type of LLC, depending on the situation, where if you get into a car accident, texting and driving, and we don't want some creditor to come after you, your assets. So if they come, I should say, if they do come after you, they can't get up into the LLC and what it's owned. Now, that can get a little complex on where we set up the LLC, how we maintain it, and what it owns. But the concept here is that we want this LLC as a holding company. This LLC is going to help us protect assets or protect us from operations in that holding company. Very common. And what you would typically do is once you form the LLC in the proper state, and I'll give an example here in a moment, you would open a bank account with the EIN, the electronic identification number. The LLC would be on title for the rental property, or the one opening up the wallet or the investment account. The LLC is the one holding the money or the asset, not you. And then as you make money, you can transfer that money down to yourself. It's called a draw or a distribution. But if you respect the LLC, you do an annual meeting, you pay your annual fees to the state, you respect the bank account, and it's the LLC doing business, not you, this LLC can become unstoppable. And this is what the wealthy do. We might start setting up more LLCs, an LLC for 2 rentals over in Minnesota, another LLC over here in Nevada for an investment of some sort, an LLC in this state or whatever. We could have multiple LLCs depending on how many assets you have, and it's going to vary. And we don't want to overdo it. We want to make sure that we're very, very careful and targeted here. And it's important that we don't get sold something we don't need. But if you own a rental property, if you have assets that you're worried about maybe losing in a potential lawsuit, we want to have an LLC to help protect you or those assets. That's the number one reason for an LLC. Now, an example. I'm a realtor. I live in California, and I bought a rental property in Tennessee. Okay, well, a California LLC is not going to help me because I don't have a rental in California. I have a rental in Tennessee. Now, we're not talking about operational business yet, but over here I have a rental property. And I got a tenant in Tennessee, and I don't want that tenant suing me and taking away my assets. And I want to have that LLC maybe provide a little privacy for me. I don't want my name on title. I want the LLC on title. I'm going to have a bank account, a property manager, all those things that come with a rental property. So what do? I set up an LLC in Tennessee for that rental property. That is an example of LLC number 1. And if you want to build wealth and protect it and do what the wealthy do, that's when you use LLC number 1. Now, I did say the word holding company, right? Well, that's just a term of art. A holding company is an LLC. It's nothing different than that. It's just kind of a term that helps you understand that this LLC is not doing business, it's holding something. So that's why I use the word holding company. We're going to talk about operational companies over here in a minute, but this is a holding type entity. Now, the cost to set up an LLC can vary depending on your expertise and what you're needing. On the low end, you might go to an online type service and set up an LLC. You could spend $400 or $500, maybe $600. Now, I know some of you are going, Mark, the filing fee is only $50. Yeah, you do it one sheet of paper, that's not an LLC. You need all the pieces and parts. So if you go to an online service, you need to be checking the boxes for an operating agreement and minutes and membership certificates and EINs and A lot of people cut corners and they think they have an LLC and they don't. So don't try to go on the cheap DIY side unless you know what you're doing. Typically, using a lawyer, and our law firm helps clients all over the country with this, you're going to be between $800 to $1,200, depending on how much involvement you want with the attorney. But the beauty of using a lawyer is they're going to do it right. And they're going to answer questions about how you're going to maintain this and move forward with it. So I think you should have a budget, and you got a filing fee with the state and all that, but I think you could budget anywhere from $1,000 to $1,300 or $1,400 on the highest end to set up an LLC holding company in this range. And you're going to keep it forever. You could use it over and over again. You could put multiple rentals in it. You're going to have those sorts of questions in a conversation with the lawyer that helps you set it up. And the last way I could say it that might be helpful is using the word holding company is kind of letting yourself, your family, your planners know how you're using the LLC. I'm going to use this LLC for holding things, so I'm going to call it a holding company. Okay, number 2. The second most common reason for an LLC, and where they're great, is for an operational business. So it's an operational company, but it's an LLC again at its foundation. So let's go to the whiteboard and we'll show this distinction. Over here is our holding company we talked about just a moment ago. Now we're going to have an operational LLC. This could be doing online sales. It could be doing a service. It could be doing a product. It could be doing a lot of different things. And for millions of Americans that have a side hustle or a side gig, this is the beginning of that process, that journey. So I'll put side hustle over here. We're going to have just this little LLC over here, and we're going to start respecting it and using it for operations. Over here again, holding. Over here, ops. There's a reason we're going to keep these separate. First and foremost, I want a wall of protection. This wall is very important in our trifecta. Anything that goes wrong over here, I don't want them getting at your assets. It's a very important concept in asset protection. Also, ordinary income, remember we talked about that a minute ago? Is the worst for tax purposes. Now, it's not a bad thing. I want you to make money. I want you to create lots of ordinary income. But we got to know that it's going to be taxed differently. And we're going to use a operational LLC to protect the tax rate, to protect how much we're paying in taxes. And this LLC is the beginning of that process. So an example over here, let's go back to our realtor. I said we had a realtor in California that owns a rental property in Tennessee. So we have this little Tennessee LLC over here. Now we're going to have a California LLC for their realtor business. The broker is going to pay them a 1099 for their services as a realtor. They're going to have a separate bank account for this LLC, a separate EIN, a separate name of the LLC. These are two separate companies, and we're going to use them for their individual purpose, holding or operations. Now, an important point here. This LLC does not save taxes. This LLC is the beginning of a process where you're going to start using this LLC for the collecting of the revenue, paying expenses and auto and home office and la. And whatever we make, we're going to take a draw or a distribution. That's great. But the LLC itself did not save taxes. This is the number 2 reason for an LLC. And we're going to start to show how it can save taxes with the third type of LLC. Now, number 3, let's go back to our trifecta. Let's clean this up a little bit. It's getting messy, right? So over here are our assets, and we've got in our example, we have our little Tennessee LLC, and we have a rental property. Okay. Number 1 reason for an LLC. It's a holding company holding assets. Over here, we have our little LLC for our new business or side hustle. This new realtor that's out in California has this LLC, and they're starting to respect it and use it in the bank and build credit and just understand how to operate as a small business. Any profits they take out and they pay for expenses out of that LLC. Over here, we're collecting rent. We're paying expenses over here, and we're taking profit over here. 2 different businesses, 2 different purposes. We do not want the same LLC doing both because we want a wall down the middle. We want protection. Now, what's going to happen over here that's a problem is this, and I'm going to use the color red here, is what's going to happen here is this LLC is going to start making money, and the owner, this realtor, is going to pay self-employment tax. 15.3% on all the profit. And you're like, well, I set up an LLC. I should be saving taxes. No, you're not saving tax with that LLC. That LLC is for holding the business operations, but you get all the same write-offs you would even if you didn't have an LLC. So this number 2 LLC can seem like a problem. And you're like, well, what's the solution? We're going to convert this LLC into the number 3 type, and that is an LLC taxed as an S-corp. That process is very simple and affordable, about $250, maybe $300 at most. That's about what we charge, and we keep it very simple. And we can backdate this LLC to an S-corp to the beginning of the year when it makes sense. So if I'm going through, let's say 2024, and I'm starting to make more and more money, and I notice that I'm going to have a huge tax bill, you call your mom, I'm making more money. And then you call our firm and you go, help me out. I got to get this S-corp thing going. And you call and we just like, okay. And then you say, can you remind me why? Here's why. When you start to make money in this S-corp, there's no self-employment tax. And even though it's a corporation, there's no corporate tax. What? Super cool, right? Well, there's a catch. You do have to take a salary, but we do also create a lot of savings. That's the main reason for this type of LLC, is so that we can save on the self-employment tax. Now let's unpack this a little bit. I know that sounded like a lot, and it could be a little overwhelming. So let's just do a comparison. Let's compare a regular operational LLC, that number 2 version, with a LLC taxed as an S-corp, that 3rd version. When a business owner starts to make more and more money, we want to convert them to the S-corp strategy. And again, here's why. Let's say you bring in $100,000, you spend $25,000 on expenses, and you net $75,000. All right, that's cool. Well, apples to apples. Over in this LLC, you make the same $100,000, you get the same write-offs, $25,000 worth of expenses, and you net $75,000. Over here, you're going to pay that 15.3% right out of the gate, and that's going to be around $10,000 in self-employment tax. Then you pay state tax, if you live in a state with state tax, and federal. So you're getting hit in 3 times. And all of a sudden you realize, what the hell? This number 2 type of LLC is not helping me. So we switch over to the S-corp, and here's what we do. We take that same $75,000 in profit. You're taking that money all the time. And by the way, I have other videos on how to use the S-corporation. We could spend a lot of time on this, but I'm just going to hit the surface level issues here. So $75,000 in profit. I'm going to split that up. I'm going to take maybe 25 grand in salary, and I'm going to pay my fair share of self-employment tax. I'm going to pay my FICA over here. And then the other 50 grand on paper, I'm going to call pass-through. Now, it's super easy to pay yourself in both situations. Whenever you want money, just take it. Take a draw. Take the money out of the bank account. I do not care. But on paper, on a quarterly basis, your account's going to file a 941 with the IRS, and you're going to go through kind of a payroll procedure. You'll learn more about this if you embark on this. You're going to do this 25,000 in salary and this 50 grand in pass-through or K1 or profit on paper. It's just on paper. It's going to take more work. It's not complex. And once you get through your first couple quarters doing this, you're like, oh my gosh, is that why every realtor, dentist, doctor, lawyer, accountant, landscaper, plumber, electrician use S-corps? Yeah, that's why we do it. Because as soon as you start to make more than $50,000 a year net, down here at the net, after all your expenses, when you start to make $50,000 or more, that's when you call your mom and then call me. And that's when we want to convert you to LLC number 3. At the foundation, it's the same name, same EIN, same bank account, but behind the scenes, we've changed its type. So now we go from a holding LLC to an operational LLC to an S-corp LLC. And not everybody needs it. You may stay here in LLC number 2 for years. Some of you needed LLC number 3 6 months ago. So start to look at your numbers, start to figure out how 2024 is playing out, and this is how the wealthy save taxes. Because they want to get to that S-corp that unlocks a lot of other strategies, and especially it helps you on saving on FICA. As I worked through college, building my small business and learning about small business, I really felt like I was on that same path many of you are, where you're living month to month, and it's tough. Sometimes you're putting the next business expense on a credit card to pay employees or whatever the case may be. I've been there, but don't give up. You can do this. And if it's helpful, if you allow me, I want to share my trifecta today, because it took me 25, 30 years to get where I'm at, and it doesn't happen overnight. I love getting rich slow. I don't need to get rich quick. And when we have that mentality, we start to not compare ourselves to others. But here's my, path and where I'm at now. So my trifecta, and sometimes my family's like, really, you're going to share that out there? Well, I'm not going to give you my address or anything. But so I have one S-corp in my life, and I teach that to a lot of clients. This is the first company I formed back in 1996, and I've had it ever since. I maintain it, I keep it strong and healthy, and this little S-corp partners with any other structure that's ordinary income. We talked about that. So this could be the law firm, it could be a real estate deal, it could be my Main Street Tax Pros. And then if I make money online, or I go to a speaking event, or I sell books, or anything, I'll put event here. Anything I'm going to make that's operational, I push into my S-corp. I take a salary and everything else is profit. Same thing you're doing. If I'm going to go create an operational entity, I don't use LLC number 2 anymore. I don't need this little LLC on the side. I let my S-corp own it. And that's how you'll expand. I probably have 3 or 4 LLCs owned by my S-corp. Then over on my operational side, I've got multiple rentals. I've got a couple Airbnbs. I've got a low-income housing deal in Chicago area. I've got a rental property in Utah and Idaho. I probably have, let's say, 2 or 3 LLCs that own rental property. And I've got probably 2 or 3 partnerships where we own a rental property. I like rental property. It's a cool deal. And what owns all of those LLCs? My trust. All goes into my trust. Now, what's fun is over in this area, I'm going to expand that. So let's say we expand that in that section. I have multiple LLCs that are owned by my Roth IRAs or my health savings account. I have a health savings account that owns an LLC that owns a rental property. I have an LLC owned by my Roth and my kids' Roth. That's not Kid Rock. Love Kid Rock. But my kids' Roth IRAs. And we do crypto mining. And it's been super cool to be out there in the crypto space with Roth IRAs. I have another 401k IRA LLC over here is doing, I know this sounds funny, but ranching and raw land and investing. And I own some cows in my LLC at one point. I've sold those. We're looking at this next deal for next year. But the fun part here is that these different LLCs encompass this self-directing space. And I learned this from wealthy clients. I was just plugging along, buying a rental property here and there, and I was building my operational business over here. And I had more and more wealthy clients come in and say, Mark, I need an LLC because I'm going to go invest in this and syndications and crypto and blah, blah, blah. And I'm like, oh my gosh, I got to be doing that too. And that's where these special purpose LLCs come in.